All right. Hello, everybody, and welcome to today's episode of Derek Invests, the market mentality. What we talk about in this part of my live streams is we talk about the stock market itself and different positions within the stock market. So this is the market mentality. I had a great podcast this morning with Kenny Coins from the Marathon Money Plus podcast. It was a great interview, I thought. We got into a lot of things. I really enjoyed the conversation. Kenny's a great interviewer. He always has a lot of great questions. Head on over. There's the QR code for the Marathon Money Plus podcast, Kenny Coins. I was on this morning, and I'm sure it'll be going live soon enough, but I want to give a big shout out to Kenny and a big thank you to Kenny for having me on. Click the QR code there. Otherwise, you can Google Marathon Money Plus and check it out for yourself. So what I want to talk about today, what I want to get into is something we touched base a little bit on today on the Marathon Money Plus podcast, and that is how the market is reacting to the election and what's happening with these different positions and how do you evaluate them. So the first is that at first, when a business comes to fruition, at first it's an idea, much like Tesla was an idea, and then it became a company, and then it started selling cars, and it went parabolic into 2021. What I mean by that is the price of the company just skyrocketed. I mean, it went straight up, right? And then it fell 70%, and since then it's been kind of it regained a lot from the bottom, back. But since the election, this busters. So I want to take a look at Tesla. And I want you to keep in mind when we look at Tesla and when we look at technicals that ultimately what will always guide a company's stock, what will always be the largest indicator of a stock over the long term is actually the market for that company. So when we talk about Tesla, I'm going to get into the technicals, and everyone knows I talk about technicals on a lot of companies. But when we get into the technicals, I want you to remember, is Tesla the company it was in 2021? How much competition realistically exists for the company Tesla? Its founder, Elon Musk, people either love him or hate him, right? They love this guy or they hate this guy. But how much influence does people loving Elon actually have to do with how well Tesla will perform moving forward over the next 2 to 5 years? Like, you can love him now, you can, all of that now, but there's competition across the board. The batteries for these cars are being upped. I mean, look, that's for you to decide. If you think that because Donald Trump got elected or whatever, that Tesla all of a sudden has some newfound success on its way, I don't know where you see that. I don't see that, but we're going to look at Tesla anyway. Costco is one of those companies that we talked about a little bit earlier on Marathon Money 2. We talked real briefly about it, so I want to look at it technically, all right? Fundamentally, there's great cases to be made for Costco, but let's look at it technically. We'll look at Amazon, Meta, NVIDIA, and Peloton. I want to use Peloton as an example of a company like we were just talking about. Peloton was the greatest thing since sliced bread during COVID. $1,000 stationary bikes, but you were going to be able to do everything on them, and your workout at home was going to be perfect. And, it's not like this is new, right? I mean, you've heard of Richard Simmons. I'm sure you're sweating the oldies home workouts, like one of my favorite of all time, Tony Hort, much love, big shout out, P90X. Sean, why can't I think of his last name? He had another at-home workout that I loved it. Insanity, his last name, but he had another great at-home workout, right? So Peloton had this idea, this stationary bike. It went straight up. We're going to take a look at Peloton if you haven't looked at it. The stock is not how hyped everybody gets about it, but what can it actually do in the marketplace? So right now with the election, is anything that's going on out of the ordinary? Is this a Trump rally? I'm hearing a lot about the Trump rally. Is it a Trump rally? Because back in 2020, which you could argue whether or not that was even a valid election when Joe Biden was elected, I mean, there were 25 million mysterious voters that showed up in 2020 that weren't there in 2012, 2016. And once again, they weren't there, but these 25 million voters, they were there in 2020. If you don't think that's at least suspicious, you have buried your head in the sand and you are just listening to what you're being told. Because I don't care who you are, that is suspicious. I was suspicious about that election the entire time simply because of the number of voters. I said it then, I'll say it now. But the point is this: Joe Biden and Donald Trump couldn't be more different. But guess what? The stock market did the exact same thing after Joe Biden was elected. Boop. It gapped up and it rallied. What did it do for Trump? It gapped up and it's rallying. How far did it rally after the election in 2020? Well, we're about at the same levels. We're getting there now in the marketplace. So is anything that happened after the election a surprise? No. When in an election year, the risk event is the election. Once the election's over, it's risk off, right? Meaning risk is now back on the table, like as in investors. Investors are willing to take risk because the risk event has passed. After elections, this is very standard what's going on now. And traditionally, this will carry through into the first or second week of December. It's done it historically for over 100 years. So no, this doesn't seem like the Trump rally. It seems like the after the election rally that we always get. So we'll take a look at that too. Let's go ahead and let's start looking at some technicals on some of these companies. I think the first thing I want to take a look at is Tesla. Let's go ahead and take a look at Tesla and see what we think here. So if we look at Tesla, this is the election, obviously. I think everybody can see it. There we go. That's the election. So 256, and you had a high of what? What's that high? 358.64. So you had a $100 rally. You had nearly 50%. Nearly a 50% rally, right? It's 40%. You had a 40% rally. Now you're sitting at 330.70. If we zoom out a little bit on Tesla, and we look backwards, it's heading back into that area in 2021 and 2022, where it then reversed back down to a low of 101.81. So what do we make of what's going on right now? Well, to do that, we're going to need to zoom in a bit because right now, at this low, a lot more volume than there is right now. There really wasn't. So we're going to want to zoom in a little bit. Why do we care about volume, everybody? What is the big deal about volume? Why am I always talking about volume when it comes to these companies or when it comes to these indexes? It is really simple. Volume is an indication of trading activity, okay? I break the market up into basically two segments. The people that run the market on a day-to-day basis, I'm going to call them the more knowledgeable hands. You can call them big money. You can call them smart money. I don't care what terminology you use. They run the market on a day-to-day basis. They place most of the orders. Then you have the second part, which is retail. This is the day-to-day guy who places some trades. He does it for his retirement, okay? You can imagine that the footprint of the trading desks with the people that run the market, these giant desks, is huge. Your footprint there is huge. Your footprint with the retail guys, much, much smaller. Way faded in the back, much smaller. So anytime we see large points of volume, when we see spots where there's a lot of activity, a lot of volume, such as here, right? There's a standout, such as here. I'd say this is a standout as well. And now we have another standout, which is right now. Okay. Now, would you say your institutional trading desk, you buy and sell for a living? It's what you do. Down here, you can see as much volume, slightly more volume than what you see right now. And this is at a price of 195. It's at a price of 195, and it actually is, it's from 150, call it from 150 to 195. You see massive volume down here. If for those of you that don't see what I'm looking at, it's right here, that large piece of volume right there, that trading activity right there. So that's from 150 to 195. Now, once again, we run into some high volume here. Not quite as much as back there, but what price is that at? That price is right here. That's at about 250, 265, something like that. So if you want to just use the number 195 and you run to 265, you have a 35% run. The market then, after this high volume at this high price, the market falls back down to a low of 203. So almost back where it came from. So this initial, let's get rid of that. This initial volume down here led to a price rise. Okay. This volume or trading activity, same thing, led to a price drop almost from where it started. Now we are at a much higher price. And guess what we see? A ton of volume way up here. So it's about as much volume as you saw here. It's back from 265 back down to 200. Here you saw a price of 195 run to 265. Now here at this high price, what do you see? Effectively the same amount of volume. What should your expectation be of price? What should it be? In areas of low price, we saw rising. In areas of high price, we saw falling. We are in an area of high price. Our anticipation should be a price drop. To where, you say? Well, back from where it came. Just like it did the last time, and like price always does. Probably back into there. So let's actually adjust this back into here. That to me looks like what we should expect out of Tesla. Now, there's gap theory that definitely there's when you look at gaps, this would justify what I'm showing, right? If you take a look at volume spread analysis, it definitely justifies that price drop. But also, let's take it one step further and just say that fundamentally, are more Teslas really going to be sold because Trump won the election or because Elon Musk has more clout in the government? If you think that, I think you're in for a rude awakening. I think you're in for a rude awakening. All right, let me go ahead and remove these drawings. So, oh, yep, I knew it. The sun went behind a palm tree on me. Let me scoot back. There we go. If there's a palm tree in front of me, and I'll bet you that's going to happen again, which is funny. So that was Tesla. So you have to remember, when we're evaluating price, we're looking at technicals, but use your common sense for fundamentals, right? Everybody wants to say, well, I invest like Warren Buffett, but if you're not looking at both of those factors, no, you don't. That's why Warren Buffett right now holds more cash than he's ever held in the history of Berkshire Hathaway. He's waiting for a sale. He knows that prices are inflated. Can they stay inflated for several months? Sure they can. Does he care? No. Because from here, active market that will drop somewhere between 30 and 50%, which is an incredible sale. So if you think long term, if you think big, right now is not the time to be in there buying new positions unless you are a swing trader or a day trader. That is a completely different conversation. And what I just showed you still translates directly into swing trading and day trading. It's just up, which we're not going to do today. So let's go ahead and let's take a look at Costco next. I thought that was something interesting this morning as well. So let's go ahead and let's take a look at Costco. Okay, let's pull this up on a weekly scale. And what we want to know about Costco, so Costco's had a nice run up. I mean, kind of amazing, really. So from the highs, my goodness, is that the highs? December of 21, the highs are what? 555, something like that. Costco's sitting up here at 931. Now, I would say the big difference with Costco is that it appears as though now, for those of you that don't do a lot of technical analysis, but you invest for the long term, something that you need to really support and resistance are areas in a range that are not just kind of willy-nilly or haphazardly created. And as support and resistance narrows, you get to a point where it's letting you know this stock's price is exhausted or this market needs a correction. So I'm going to do something right now that I am going to do now. So this is where price breaks out to a new high price right there. Okay. Typically when price breaks out, what it'll do is it will return to that high price. Where it returns to, this then becomes your support. So in this case, your next level of obvious support would be there. Although price did not return and typically it does. Here's your new support, which it does. Price does return to support right there. Price, you've broken support. There's your breakout price, you've broken support. So I would say that this particular company, you can see that it kind of stayed the same. Maybe this is a little bit wider of a gap than the previous. This went from 700 to 787. This one from 8 to 922. Actually, I set that line a little high. Should be about there. So there, that looks better. Sorry about that. I had that line a little high. So as you can see, there is narrowing going on here. So is price getting exhausted? It's possible, right? It is possible that it's getting exhausted because this will be accomplish it. So as you can see, support and resistance are compressing. Support, resistance are compressing. Okay, that's just something to be aware of. Now, let me get rid of that. Let's talk about Costco as a company. Costco is a company. It has a subscription plan that protects it from a lot of like inflation is really tough on places like Costco, but they have a subscription plan. So that really protects them to have that subscription, right? You want to have some sort of subscription along with the product if you can help it. It helps you modify cost. The other thing that I know Costco does that I absolutely loved, and I talked this morning about, is that Costco actually will, in economically depressed areas, believe it or not, it lowers its prices. So it's also an amazing company that should carry forward quite well. Here we go. We're behind the palm tree again. I'm just going to continue on, everybody, and keep going and talk about these stocks. So does Costco have a model that facilitates the price where it sits? I would say that it does. I would say that its model is fantastic, right? You buy more, you get more, so you save more because you're in bulk. You have a subscription service. So if inflation hits or some other kind of inopportune situation hits, well, you have the ability to absorb some of that cost through your subscription. So it's a great, great business model. Let's take a look. We did Costco, Tesla. We'll look at Amazon, Meta, NVIDIA, and I'm going to use Peloton as an example. So we will look at Amazon now. Amazon. And does anybody think that Amazon has had a business model or something unique to Amazon that's occurred, or something that adds value to Amazon or anything along those lines right now? I would say with the U.S. consumer in more debt than they've been since 2008, with real estate being purchased at levels that we haven't seen since 2008, I would not say that right now consumers spending money. And if you're looking at some different, if you're looking at volume or trading activity, Most recently, what you'll see is this, which is the biggest piece of volume on the screen right here. Okay. Let me go to a weekly chart real quickly. On a weekly chart, don't worry about that. I'm not even going to move it. The last big volume you saw is way back here in March of 2020, where Amazon absolutely took off and completely retraced. Took off from 80 up to 180 and then back down to 80. And here we are now as it's sort of just marching up. So let's zoom in on this March and let's see what we see. This should be August 5th, I believe. Yep, that's August 5th. So let's zoom in on that March and see what we see. This is the last piece of big volume. It sits down here at what's the low price there? Low price of 150. Right now you're trading at 215. And I wouldn't say that volume is high. This is volume now. I wouldn't say volume is as high, but volume is higher than normal. Is this anything to be leery of? No. Is Amazon having some spectacular run? From 2 to 215, so July 11th, since July 11th of this year, that's July 5th. Where's July 11th? The top. Yep. So since July this year, this stock has rallied, what, 6.5%? I don't know that that's anything to write home about, so I don't really think we need to look too much at that. Let's take a look at Meta. Right now, everybody, we're looking at big picture. You want to know what I think on a daily basis or on individual positions. I'm going to start a subscription service here very shortly to do that. Okay, so what do we think about Meta? Well, Meta didn't really get any run out of the election. In fact, it's sitting pretty flat right now. Let's take a look at it on a weekly. On a weekly basis, there's a ton of volume down at 120. You're sitting at 584, which is really close to where it's been for quite a long time now. This is what, 530. So points. That's a 10% since what? February of this year. 10% run since February of this year. Not a big run. No, it could mean that there is the price right here is just lackluster and you're going to need a pullback to simply draw some interest into the stock. Here you can see how Meta behaves with gaps. Here's a gap right here. Here's a gap. And here's how it fills. It fills right here. It retraced that gap. Again, when you're looking at companies, you need to see how that company behaves with gaps. Here is another gap right here. It retraces right here. Do we have any gaps now? I don't see any. I don't see any. So, yeah, I mean, with Meta, I don't see any real run from the election. So I don't see anything really that we need to look at all that closely when it comes to Meta. Let's look at NVIDIA and Peloton. If we look at NVIDIA, this is June. Yeah, June of 24. It has really gone nowhere. It looks like volume is drying up. Volume drying NVIDIA. Let's take a look at what we think that might mean. So here's NVIDIA's run up. So here's NVIDIA's price. Let's take a look at its price. Its price goes absolutely here. Completely parabolic. Volume has gone straight down. All right. So volume straight down. NVIDIA. We'll put volume down. Price up. Let's take a look at a company that I have said NVIDIA will eventually look like, and that company is Tesla. Let's take a look at what Tesla looked like as it ran to those parabolic price running highs in 2021, because that might tell us a little something about what Nvidia might look like, and if did for example, did Tesla run out of energy? Did it lose volume as it was hitting its highs, or did it gain volume? And I'll be honest with you, I don't know. I know we just looked at it, but I don't know. So let's scroll over. Well, I mean, what I would say, even if you just scroll over to here, whoop. I mean, it looks to me like Tesla has the same behavior. This is price up. This is volume way down. I mean, it looks to me like it carries the same behavior. Let's throw it up. Volume up. No. Volume down. Price up. So I would say if you're looking at a company that has behaved very similar to NVIDIA, a lot of hype, new technology, it's going to change the world. Everybody's so excited about it. I would say that was Tesla back then, and I would say that's NVIDIA now. And believe me, I'm impartial to this. I am not looking at this as a means to find something. I love it if NVIDIA just continues to go straight up. What I can tell you is it's looking a bit exhausted, and it's looking a lot like Tesla did. I mean, it is looking a lot like Tesla did. And I definitely believe in stock cycles. And one of the cycle of a stock to me is real simple. There's an idea, and if the stock is skyrocketing, obviously people love the idea. It's a new idea. It's an idea that's going to change the world. Everybody gets on board with that idea. Too much optimism takes place. The stock goes parabolic, and then typically what follows that is the business has to prove itself. And no business can live up to the hype and the positive emotion behind people that are making money. No business can. So they almost all suffer the same consequence ultimately, which is they draw back to where they came from, whence they came, and then they have an opportunity to really prove who they are and really show the market what they are. And I think that's where we're coming to with NVIDIA. Now, this is Peloton. See, this is a company that was unable to prove itself at all. So Peloton didn't prove anything. All Peloton proved was that it was a stationary bike. It was an idea that was fun, but meaningless. And so when you look at this, obviously you see this volume, right? This is why I pay such close attention to trading activity, because look what price does straight up do. I mean, it's not even a comparable chart. I mean, volume from here, just look at that. I mean, volume literally is reacting in the same manner as price, just in the opposite direction. I mean, it's just such an extreme that this probably isn't even a great comparable, right? Because this company simply didn't work. Peloton is what it looks like when the hype so far exceeds any possibility of reality that the company really just becomes inconsequential. Volume down, price up. All right, I'm just going to take a quick screenshot of this so I can save that guy for later. All right, so I hope that was informative for you today. It certainly was for me. I am shadowy darks of the sun because the palm tree is hiding everything. But I really hope you enjoyed it. Again, I want to give a shout out to Marathon Money Plus for having me on today. Kenny Coins, great host. I really enjoyed it. He really allows you just kind of the freedom to get your ideas out there and talk. And I just have a good time doing those shows. And I think I'm going to start doing some of that myself here. I'm going to reach out to a few people today. I think the interview kind of process looks really cool. So I would love to do that here. In any case, I want to thank you all for joining me so much. I hope we kind of, we talked about the election and what happened there. We talked a bit about technicals, a bit about fundamentals. And I hope that all rang true with you. I showed you kind of what that, when a price goes parabolic, why and how it kind of moves in the direction it moves. I hope you enjoyed that. I'm going to go ahead and hide Kenny there for a second. For any of you that enjoy that, and if you're here and you're going, look, I'm a day trader, and what I want to know is who's putting in the orders? When are they putting in the orders? You understand that there's an undercurrent to the market. The people that create these marketplaces are called market makers. And what they're doing constantly is they're in there. They're basically creating these markets so that we all get to trade. And someone that knows a lot about that and is an ex-market maker for a couple of really helped understand the flows, the undercurrents in the derivatives markets that really drive the price of the market. And in an amazing way is vol signals. Friend of mine, trust him. I've learned so much from him. You should too. Check him out, volsignals.com. There is the QR code. Don't forget, Derek10 is the coupon code. It'll get you a 10% discount. DEREK 10, Derek10 at Vol Signals. Go check that out. And let's see. I finished a really big sale on some of my courses yesterday. So I'm not going to get into that now. But one thing I do have excuse me. One thing I do have is that I am going to have the format of the show. I'm going to have Derek Invests, right? It's still Derek Invests. I'm just going to do a piece each day that is the market mentality. And then I'm going to do a second episode each day that is stories of a financial advisor. I was a financial advisor for nearly 2 decades. I worked with a couple of the biggest firms on Wall Street. I also hung my own flag, staked my own claim for about a decade. And so I talk about stories, mistakes I've seen, things I've seen, being in an industry for as long as I have. So that is going to be stories of a financial advisor. Derek Invest, stories of a financial advisor, and Derek Invest, the market mentality. All right. Thank you all so much for joining me. Remember, get outside, be happy. Every day above ground is a good day. We'll see you all soon.